Shot yourself in the foot. EU warned Brexit games will do catastrophic damage to bloc. Amsterdam overtaking London as Europe's biggest share trading centre has been labelled a short-term issue by an independent economist, with Britain set to thrive in the long run. Julian Jessop, an economics fellow at the Institute of Economic Affairs, who has previously worked for the Treasury and global banking firms, has backed the long-term future of the UK's finance sector. This week it was announced stock exchanges in Amsterdam traded €9.2 billion, $11.15 billion, a day in January, compared to London's $8.6 billion, according to the Cboe exchange, which operates in both cities. The shift to the Dutch capital has been blamed on Brexit, with euro-denominated trades moving to the EU due to Brussels rules. But Mr. Jessop was unconcerned by this week's announcement and said it would have minimal impact on Britain's long-term future. Right from the beginning of the year we knew that a lot of euro-denominated currency trading was going to move from London, he told Today News. It's a relatively unimportant bit of business. Euro-denominated equity trading, and equity trading more generally, is pretty small in size compared to other markets. It's also relatively low-margin business, and it's also basically commoditized, so there aren't many jobs, and there isn't much tax revenue involved. I don't think it's an issue at all that we've lost a big chunk of that business. EU rules require EU-based firms to trade interest rate swaps and credit default swaps either inside the bloc or from a country whose standards have been recognized by Brussels. The UK has not been granted such so-called equivalence yet. The EU has said it needs information about Britain's intentions to diverge from EU rules before granting such access. However, Prime Minister Boris Johnson's spokesman said London had already supplied the necessary paperwork, adding it is in no one's interest to block UK access to the EU. Mr. Jessop told this website Brussels' protectionist game would come back to haunt the bloc. He said, "The short-term impact is negative, but a small one. The bigger picture, though, is what's going to happen over the next few years. It's clear that EU is playing hardball. There's no rational basis for failing to extend equivalence or mutual recognition to the UK. They are clearly just playing a protectionist game to support their own financial sector. But that's ultimately bad for them, because any increases married to trade is bad for both parties, including EU companies that wouldn't be able to raise money as cheaply as they would otherwise have done. But it's also sending out a terrible signal to the rest of the world. If I was a US-based investment bank or an Asian investment bank looking at how the UK government and the EU governments have behaved, I would be much more willing to locate somewhere like London." He added, "I think that EU's really shooting itself in the foot here. It has a small short-term gain from this. In the longer term, this is actually a positive for Britain, because we're standing out as the grown-up in the room." Today News. Latest news. Please support our work.